just be shocked. So really quick about me, just so that you'll know who you're working with. My first day trade ever was on Freeport McMoran, ticker symbol FCX. That was back in 2000, late 2009. First day trade ever took. The stock I've day traded the most in the last combined 3 years, the stocks I've traded the most in the last 3 years are AMD, Tesla, Square, and Apple. So over the last 3 years, those are the 4 stocks I've traded the most. Question, do you think you could just day trade these 4 stocks for the rest of your life and be good to go? Yeah. Yeah, you could. Now, again, sometimes it's going to come down to capital, but that is realistically, you can just focus on those 4 and you're going to be fine for a long time, up or down. You know how to short, you know how to go long, you can make money regardless. It's all about risk control. We're going to talk about that a lot. My favorite cake is probably carrot cake since it's very healthy, and I also love blackberry cobbler. So those are some things about me. And if anyone here wants some slides, if you want to get access to what you're currently visually watching with your eyeballs, you can text the word Newsome to this number, 55444. Or if you're in Canada, you can text the word Newsome to 312-487-3550. Boom, and you'll get automatically slides sent to you from each class. You'll also get a free real-life trading dashboard, and we'll give you the opportunity to load up all kinds of goodies on your dashboard. Pam says, carrot cake with icing, right? Of course. Yeah, definitely. This is what the course looks like. So we are here, the basics of day trading. We're going to cover the basics. And then the very next module, we're going to talk about gaps and reversal patterns. Then we're going to discuss the math of how to become a full-time day trader. Then we're going to talk about the best way to use moving averages. And then we're going to talk about brokers, margins, and your day trading plan. Now, again, I could absolutely say, hey, everyone, here's one stock, focus on this stock, nothing else, buy low, sell high, and be done with it. The truth is, many of you would be very bored with that particular strategy. Some people need that regiment in their life. I did day trade one stock every single day for 2 years, focus on nothing else. But keep in mind, regardless of where you are in your journey and why you're there, I am able to help you because, and no one else will say this other than me, I'm not the best trader in the world. By far. Not even close. If any of you know anything about NFL football, I'm kind of like the Miami Dolphins. If I had to describe my day trading and my trading in general, my trading skills in the market, I'm like the Miami Dolphins. I'm professional. I'm getting paid to do it. But I'm not winning any Super Bowls in a long time. I'll have some good spurts, and I'll have some times where people are like, wow, that's really cool. But nothing insane, amazing, incredible, or phenomenal all the time. Just consistent. I show up. I get paid. We have fun. We make money. However, in my personal and humble opinion, if you were here listening to my voice, I am the best instructor on the planet as it relates to the stock market. Can I teach quantum physics? No. Can I teach the stock market, risk reversals, candlestick patterns, sentiment, realistic expectations, real life plans, procedures, thoughts, and strategies? Yes. So that's why I want you all to stay tuned. I'm really excited about this class. I'm totally insanely fired up, and I really honestly am thrilled that you are all here. So type in a 1 if you are ready to get rocking and rolling. Whoo, it's a lot of 1s. Oh yeah, I love it. Let's go. Module 3 is going to be so good. Unfortunately, I know for those of you right now, you're all excited and fired up. And you're like, no way there's going to be people that are going to drop out. I promise. Unfortunately, the vast majority of people who start this, even though it's entirely free, even if I charged for this, most people will not make it to Module 3. It's going to be one of the most enlightening and spellbinding courses I've ever created because it's going to help you really understand the math of this stuff, and it will not shock you, and it will not be overly complex. Trading, again, is as simple or as complex as you want it to be. But please do your absolute best to make it to at least Module 3 so I can be sure that everyone who's watching this knows how to properly mitigate risk, control your patterns, control your emotions, and give some realistic expectations. Because people who are watching this, my target demographic, my audience, The people that I connect with the most are not really the Lamborghini, martini, bikini kind of people. I love Lamborghinis. I love Maseratis. I love Ferraris. I don't own any because I feel like they depreciate a little bit faster than other vehicles and or other assets that I can buy with my money. The people that I'm trying to reach are the parents, the moms, the dads, the teachers, the firemen, firefighter, fire lady, engineers, scientists, those people that are going through our military, either currently or former, the families, the people that got Cheetos in your Honda Odyssey, right? The people who are retired or about to retire, and you're driving your kids and your grandkids around in your Toyota Corolla, and you got cheese everywhere, all right? How do kids eat cheese and they just get it in every crack of the seat? I don't know yet. I haven't figured that piece out, but somehow it just goes everywhere. That's what I'm talking to. We are able to escape financial freedom and to achieve financial freedom. There will be a time in your life where this can absolutely come into place, but you're going to need to understand that it will take patience. So I do spell patience a little bit different than most people. I spell it with a Y because you will get paid if you're patient. You're going to get paid. You just have to understand that the hardest part about trading is generally not trading. That's usually it. Most of the time when you start getting on a roll, you're like, I need to keep doing this all the time. I'm not saying 7 years down the road when you're amazing at this. I'm talking about for most of you, you're probably less than 3 years into your journey. Most likely, I'm not saying that has to be the case, but for you, 75% of you are less than 3 years into your journey if you're watching this video. And the hardest part of your journey will be holding on to your winners, cutting your losers, accepting losses, being a great loser. I know I keep using the word lose over and over and over because there is losing and then there is failing. Those are two different things. Two different things. You're going to lose, accept it. It's going to happen. It's like flipping a coin. If me and you sat at my dinner table, dining room table, and I said, all right, Sam, me and you flip a coin. Every time it hits heads, you pay me $600. And every time it hits tails, I'll pay you $1,300. Are you guys playing that game with me? Everyone should play that game. The cool part about day trading and about trading in general is there are a lot of similarities to gambling, and there's one main difference. I agree wholeheartedly that day trading is a lot like roulette. It's a lot like roulette. But there's two main differences with roulette and the stock market. In the stock market, there is no green. There is no green or double green zero. You're playing red and black or odds and evens with no green, no zeros. You're just playing your odds and evens. And if you can lose less money than you win, you can be profitable. It's about mitigating risk. It's about not being afraid of the math behind the trading. It's about knowing how to spot momentum. It's knowing how to play it, knowing how to set up in your broker, having your plans, having some realistic expectations, grinding, being able to pay someone to come to your house and do a mobile car detailing so they can clean up all the cheese and the Oreos and the cookies that are in your seat. This is a personal experience today. Like how is this possible? But it's okay. So here's where we're going. Here's some tips for success. These are, again, a lot of tips that I will give coaching students at some point in time when I work with them. It depends on their journey, depends on where they're at. It oftentimes comes down to what they're struggling with. But one thing you can do for a period of time, it doesn't have to be forever, but for a period of time is focus on one stock. Just one. Do you have to buy 1,000 shares to make money on a stock, on a day trade? Yes or no? And the answer is no. No. You can buy 10 shares. If it's Amazon, that's a $30,000 investment. Or if it's Tesla or Apple or Lulu or AutoZone or Caterpillar or Chipotle, You don't have to be 1,000 shares. It's just math. It's second grade math. So at some point in time, I suggest trying, even if it's a challenge to yourself, focus on one stock for a day, for a week, for a month. Just pick one and go, all right, this is what I'm gonna do. I'm gonna buy this one, I'm gonna sell this one, I'm gonna play it every single day. Now, here's another tip. If you don't wanna do that, how about do this? Focus on a singular type of strategy, pattern, and direction. So what in the heck does that mean? Well, let's say, for example, the only thing you trade, the only thing is bearish day trades. Okay, so if the only thing you're playing is bearish day trades, is that a direction, yes or no? Yep, obviously it's a direction. So, okay, you're playing bearish day trades. Cool. Now, as far as a pattern, what pattern could you look for? I'll tell you right now, this is it. You could just look for that pattern all day, every day. This right here, that exact pattern. When stock goes down, it trades up, it comes into some moving averages or some fibs or some confluence or some something, and you get some type of candlestick reversal pattern, tweezer tops, evening star reversals, one black crows, shooting star, something, and then you enter here and your stop's up here, and then you hope it goes lower. And that's it. Or you focus only on, and some of you might not know this exactly, but that's okay, we'll get there, gap down fades. One of my other traders also happens to be Canadian. I promise I work with other people, but these are the people that just pop into my head right now. His name is John, and he was a coaching student that I worked with, that I'm still working with. Great guy, I love this dude. And he came to me, we started working together. He was making like, I don't know, $185 a month, which obviously is not that amazing, but it was profitable. I was like, okay, man, let's see if we can crank the dial. You're kind of all over the place. Let's focus in on what you do really well at. And lo and behold, he was really good at gap down fades. So we started working on gap down fades, and now he's doing consistently about $600 to $800 a month. So better, right? A lot better, not insanely, incredibly amazing, but pretty good. I mean, $600 to $800 extra day trading, like pressing buttons, is not bad. So anyway, that's one other thing that you can do. That's another tip for success, is either A, focus on one stock, B, focus on a singular type of strategy, or C, focus on the same 5 stocks every single day and add one additional variable to be replaced every day. So a little bit of a blend of the two. So you have 5 stocks to look at all the time, so it gives you some variety, and then you add a 6th one that's like, who knows? Could be anything. You add that one, and then you, as you're focusing on those 6 stocks that one day, those are the ones on your watch list. You don't worry about FOMO. You understand that FOMO, fear of missing out, is just going to happen. Move on, let it do its thing, let it go into it. Matthew says, do all 3 or pick one. Pick one. Yeah, pick one of these. Pick one. 1, 2, or 3. Go down that direction. What we'll be doing a lot in this particular course and class is we're going to talk a lot more about this. We're going to focus on specific strategies and patterns and directions that you can really, really nail down and become great with. And I can assure you, if you're this far in the class already, and in the back of your mind, you're like, I hope it's not a bunch of just 1, 2, 3 tips for success. Do this and you'll make tons of money. And this is very broader based stuff. It's not. 5 more slides. We're going to get into some really, really heavy chart stuff. Right now, all I'm doing is intentionally, since this is free, I'm weeding out the people who don't want to be here. Trust me, I understand the mechanics of sales very well. I get it. Everything I'm doing right now is not really supposed to be what you're doing in sales. I'm just dragging on points that don't really make much sense yet. But since it's a free course, I want people to really care. And if you really care, you're going to get past the initial fluff into the meat. Brett says, candlestick sentiment? Yes, until your face falls off. Get ready for that. It's going to be awesome. Okay. So again, here are the 3 things that you're going to do. Remember, we just talked about, I'll go back, the slides, the tip for success. Pick one of these 3. Once you pick one of these 3, then you go into these aspects of what you're doing. So if you are trading just one stock, AMD, and that's it, that's all you're doing, you still have to find the trend. Now, finding the trend might be very easy if you're focusing on one stock because it's going to be the exact same every day for months and weeks at a time. Does that make sense? So that's, finding the trend can be a quarter of a second thing or something that you already know over the course of a few weeks or months. But this one's going to take work. Determine who's trapped. You should always do that. Every single day, you should be doing that. If you're trading one stock, multiple stocks, or one specific strategy, you got to determine who's trapped. And then, ready for this one? Look where tons of people have their stops and get in there. It's a great strategy. It's pretty solid. Matthew says, you're making my day trading plan for me. Yeah, man, pretty much. That is definitely what this course is going to help you with. So this is a good one. Look where tons of people will have their stops and get in there. Now, again, if you don't know anything about stops, don't know anything about traps, don't know anything about anything, and this is totally brand new to you, I do have a beginner's course, which is also free. And I go over all of that stuff all the time. So I break down the really basics. We're not going to go super basic of like what's a candlestick in this course. I have other courses, classes, and programs for that. But what we're going to do is we're going to start with a chart. Awesome. Beautiful. So only 30 minutes in, and now we're looking at some charts. So this chart image, I want to be very clear on this, was taken before the market opened. So everything we're about to do is we're going to practice what you would have looked at before anything happened. I realized in one of my last day trading programs that I taught, people had a really hard time understanding, was I looking at something that has occurred or had not occurred yet? So what I'm doing now is I'm showing you this is before anything ever occurred. I don't know what's going to happen yet other than where it's going to open. So what I want to do, if that's okay with you, is I want to walk you through the thought process of what I thought and why. And I will give you my mental procedure of looking at any chart when I decide to take a day trade. Type in a 4 if that would be helpful. All right, beautiful. So again, I'm just going to give you my opinion, my perspective, what I'm thinking, why I'm thinking it. And again, I'm not the greatest day trader in the world. You can take the information I'm going to teach you and you're going to make money with it. You can make money with it. It's absolutely achievable. You can become time-free, financially free, massively abundant in your bank account and your relationships and your family, your spirituality, your emotions, all those things can absolutely occur. Here we go. I'm just so fired up about this. Man, I'm just jacked up. All right. This is one of my favorite day trades. Now, this is not quote unquote a strategy name. I just threw this in here, I guess in quote, so it kind of looks like one. But this is what I look for all the time, every day. I've moved past looking at just one stock only because I do love variety. I'm a variety kind of person. I've already done the focus on just one stock. I've already done that. I've already been there. So this is one of my favorite types of trades, the gap above the high of multiple days. The gap up above the high of multiple days. When I say multiple days, that does mean multiple, like Mondays and Tuesdays and Wednesdays, like days, and the gap above the high. So it's an open above previous highs. So we're going to break that down. This is Twitter. Now, what's really cool about Twitter is Twitter could actually be one of your candidates that's on your list every single day. If you were wondering, I hope Jeremy gives me some stocks that I could look at every single day, this would be one of those. Twitter is a stock candidate that can be on your list every single day. It has great liquidity. It has weekly options, has really good bid-ask spreads. It gaps about 3 out of the 5 days of the week. It has an average true range of above 1, and it's really not that expensive. I mean, it's $40 a share. A few weeks ago, it was $25 a share. By the time you're watching this video, maybe it's like high $50 a share, but it probably won't be super expensive for a while. So a lot of you could buy 1,000 shares of Twitter. Maybe you have to use margin, but you could. It's a really fun stock to trade with. I like it. Now, this particular gap, this particular day trade that we're about to discuss did come up on a scan. So it came up on a scan since it was gapping above the high of more than 10 days. And what's really important here is I want to make sure that you guys understand this is a scan that I do have. It's gapping above the high of 10 days. Does it have to be 10 days? What do you all think? No, you can tweak it. You can adjust it. You can make that whatever you want. 10 days is a good number. I've found that it's, it works like anything else. It can be at 8, it can be 9, it can be 13, it can be 7. I wouldn't necessarily do 1. So I would do more than 1. Generally 2 or more starts working out pretty well. I just like to select 10. So it's a scan that I have. Do I have to use this scan? No. Do I use this scan every day? No. John says, is that a scan that can be done with FinViz? Not to my knowledge. But it can be done in almost any broker. So again, keep in mind that this did not have to be found with a scan, right? Even though I did find this particular gap with a scan, it doesn't have to. Michael says, can you have multiple scans from multiple days, then pick the best one on a daily basis? Of course. Yeah. That's like saying, can I go into an ice cream shop and only select the best ice creams and eat all those ice creams in one sitting? Yeah, man, you have the power to do whatever you want. That's easy. So again, the aspect of this gap is I don't have to find it on a scan because everyone here knows exactly what Twitter is. Everyone knows what Twitter is, and you've all probably played Twitter once or twice. I've been a 2 if you've played Twitter before in your day trading career. Everyone here has probably played Twitter once or twice. You all know what it is. It's one of those stocks that you could literally look at every single day just to see what it's doing. So this particular day did happen to come up on a scan, but it didn't have to. So remember, this is what we're talking about. Step 1, find the trend. So we're going to practice these things because this is what I do. I find the trend. I determine who's trapped. The second one's the one that takes the most work. This is the one that's the most mental practice. This one should take 8 seconds max. And then look where tons of people have their stops and get in around there. So that's that's a pretty easy one. The middle one's the one that takes the most work. This will take some hours of time, energy, and effort to really, really get and understand. But once you master it, it never changes. Will it always work? No, nothing always works ever, anywhere. Traffic lights don't always work. Cars don't always work. Gravity always works. But there are some things that generally don't always work, especially if it's not gravity. Amit says, why should we get in where people have their stops? Have you ever got wicked out of a trade, Amit, and was like, man, that's so mean, and then it kind of get going in your direction? He says, yes. Then just be that person. People always complain that they get wicked out of trades. They're always like, oh, I got wicked out. I was like, all right, well, then just be that guy who gets in there. Don't get wicked out. Be the person who wicks the people out. Be the stop hunter. Put your entry there. I mean, that should not be a mind-blowing piece of information. It's like, just do that. Is it always going to work? No. Will it work a lot? Yeah. Pretty cool stuff, right? All right, cool. So let's go practice this. Number 1, what is the trend on this stock? Now, in day trading, I generally only care about the last 4 months. Generally. Now, there are some times where I'll look at a little bit of a larger trend, but oftentimes 4 months is totally adequate. So who wants to answer that one for me? What is the trend on the last 4 months of the stock? Obviously, it's bullish. Okay, obviously bullish. Playing with the trend will give you a higher probability of winning. I'm going to repeat this 2 or 3 times right now. If you like higher probabilities of winning, go with the trend. The most noob thing you can do is think to yourself, oh, it's not going to do that because it's never done it before, so let me do it now. AKA, oh, wow, this stock's really high, so it must go down. Or, wow, this stock's really low, so it must go up. No, it doesn't. No, it don't. No, it can keep going that direction for a very long time. Hashtag Tesla. People are like, Tesla has to pull back, right? No, it doesn't. Why? Who says who? A very popular quote from the book The Reminiscence of a Stock Operator by Jesse Livermore. The stock market will always remain irrational much longer than you can remain solvent. So don't try to say, oh, it can't do this, and then take a trade based on you think it can't do it, because it can. Right? It'll just keep on wrecking you and taking your money over and over and over if you don't think it can't do something. So just don't think that. Think that it can keep doing what it's doing, because that's probably what it will do. That's called history. That's called math. If something has continually happened over a long period of time, guess what it's likely going to do? Continually happen. So the world, as an example, will continue to be here for a very long time. I grew up in a religion that taught me that the world was going to end any day, like tomorrow, whole world, done. Not really. Yeah, no, it doesn't, because it hasn't ever happened. So since it's never happened, I mean, it won't. You know? Over time, you got to go with history. You got to look back and go, yeah, that could keep going. There's also a book, and I forget the exact book. I think it is Stock Market Wizards by Jack Schwager. I can't fully remember, but it's a book where there's a chart. And I've done this in numerous other classes, but this chart is drawn, and the person is one of the biggest, most wealthiest, most popular person out there in the fund world. Does anyone know who PTJ is? If you don't, type in a 1. It's okay. I'm not going to make you feel stupid. I promise. I will tell you the name. Paul Tudor Jones. Okay. Extremely well known, very, very popular, huge in the stock market world. Feel free to Google him. But Paul Tudor Jones, in this book, in this particular excerpt, says, what do you think this is going to do? And right very next page, he says, if you said it's going to go down, you should probably stop trading the stock market. Because when you're looking at this red curve, you don't know anything else other than the red curve. And if you think, oh, it's going to do this, why? Based on what? You know? Like, based on what is it going to do this? Like, that's all the information you have is the red line. Nitro says, I just had an aha moment. Who else just had an aha moment? Yeah. Again, so understand that if a trend is doing something, that's what it's going to do. Now, can a trend get broken? Absolutely. And we can play broken trends, especially if it happens with a gap. We're going to talk more about that in Module 2. In Module 2, we're going to talk about gaps that can reverse trends and can really scare a lot of people, and you can make tons of money that way, and it's a lot of fun. But in general, find the trend and go from there. Number 2, determine who is trapped. Looking at this chart, where do you think the shorts are? So when I say the shorts, the people who are betting that the stock's going to go down, the people who are trying to make money when it goes lower, where would you say the shorts are located? And there are some individual candles. This is a very important aspect of the class right now. Very specific candles that I can look at with my eyes and go, yep, there's absolutely people shorting here. Multiple people. All right, so the very first one that should stick out is this guy. All right, well, let's go look at some more. These are the ones, these are the candles where people are shorting. How do I know that? You ready for a really, really cool answer? Because it went lower. That's how I know. I can look at it and go, yep, it went lower after those candles, so therefore people are shorting there. That's it. You don't have to get more complex than that. Can you? Sure. There are other factors and implications that can cause stocks to go lower, but since I can look at it and go, yep, stock went down after those days, I know this candle, this candle, this candle, this candle, this candle, and right there are where shorts are located because of the upper wick, because of the fact the stock went lower. It really is that simplistic. So you have selling pressure. You can look at those candles. You can look at the wicks. You can really, really see that right here, there is a whole heap ton of shorts just piling in this thing, creating this pressure, creating the stock to go lower. Brett says, why would someone shorting hold through the bottom and an uptrend starting? Brett, why would you be in a stock that was bullish that you hold as it goes lower? It's the same answer. You know, so if someone shorts here and they're holding through this, they think it's going to go lower. You know, just like when you're in a position, you're like, oh man, this thing's going to go up. It's going to go up forever. So you just stay in it forever. So that's the thing, is it's just emotion, just human sentiment. Now, the point is, did these people short and literally stay in short the entire time? Probably not. Probably not. But we're going to practice this, the who is trapped. We're going to do that a lot in this series because it is one of the most important aspects of all this, and it is the most challenging aspect. But number 3, we're going to talk about where people have their stops. Andrea says, when I was looking at who was trapped, I was looking at the 1 hour or 30-minute time frame, which I had a hard time figuring out. We'll definitely practice that. Sure. Easy. No worries at all. The key is looking for wicks, looking for a bunch of upper shadows and lower shadows, looking where there's very clear support and resistance. So this black line, would you all agree, is a resistance on this chart? This is a supply zone. This is where people are selling. They're either selling to get out of a position or they're selling because they think it's going to go down. Now, when you're looking at this, remember, I'm pretending that I don't know what's going to happen the next day. When I'm looking at a chart, you are able to see what the stock is doing before it does it. You're able to know, is it gapping up or is it gapping down? That is a very, very clear thing that any broker and or charting software should easily be able to discern for you. What is it doing? But in this example, what I'm going to show you is, what if it was gapping down? Okay, what if it was gapping down? I know that it's gapping up, but what if it was gapping down? I want to figure out, where will the most people be trapped at? Because if everyone is shorting here at this red line and the stock is gapping down, most people are going to be short and going to be scared breaking that pivot. The most recent, really hardcore pivot that gets formed with one of these guys, right? Boom, 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 boom. When it has like a really clear wave, when you can absolutely see in hindsight, yes, when you can look in hindsight in the past and go, this thing made a very, very, very clear pivot in the sand. It bounced, like right here. That's a very, very clear pivot line, very solid price. So if on this day the stock gapped down and opened down here, everyone will be horrifically trapped, scared, panicked, and losing money, and therefore it probably sell off pretty strongly. So on this example, when I'm looking at this, any particular trade, I'm trying to determine if it gaps, how people are going to feel. So if it's gapping down, all of these long traders, if the stock gaps down, especially below this pivot, the one I'm pointing to with the arrow, if we gap down below there, all the people in the red circle are trapped. Trapped meaning they feel bad, they're scared, they're worried, they're losing money, they're pissed off, they're upset, and it's beer 30 by 9 o'clock in the morning. You know what I'm saying? Ever had one of those days? You're like, it's 9 o'clock and I want to drink. So this level right here is where you have this old resistance, new support. It's a strong S-curve pattern. It's an obvious pivot. There are tons of stops right here. So where people are in, they have a stop loss right there. We know that. We can see that. We know that there are stops there. So if Twitter opened down there, it would devastate some of the long traders. So that's what a pivot is. The reason I'm bringing that up is, again, I can look back and I can realize, do you think that this is a strong pivot for some short traders? I mean, look at how clear of a distinction that is, that it came there and then just plummeted. It's a really, really clear line in the sand where it's like bang, bang. And we can use the past to identify that. Anytime there are really clear cuts in the sand, so to speak, when there is line in the snow, that's when you can go, all right, these are really, really key places. And if the stock is ever gapping past one of those locations, it's a very, very strong signal. It's really powerful. Case in point would kind of be right here. Would you all agree that this is one of those clearly defined, absolute line in the snow type of locations? Yeah, definitely. Matthew says line in the sand. Is that the quote? Just kidding. So that you guys know, I mess up quotes all the time intentionally. So just make sure people are paying attention. But yeah, man, I appreciate it. So it's a very clear pivot, right? Extremely decisive, directional place where the stock stopped moving. Ba-bam! Ba-boom! All right, new candle, bang, new candle, bang, new candle, bang. So you have these wicks, so you can tell there's just a lot of people protecting this thing. So when this gap happened, you opened below this pivot, these lower shadows, this lower shadows, everyone is wrecked. Everyone is absolutely hosed. You're eating a burger with really drippy barbecue sauce and you're wearing white clothes. Cabria says a stop loss triggers for a lot of people. Exactly. Andrea says, can you post a picture and description of the different looking candles? So my dear friend, what I would suggest in that situation is pop over to my website and get my candlestick ebook. So if anybody's interested, I'll pull that up really quick. If you do want more information on candlesticks, the different types of candles, I have all of that on my website. So go to reallifetrading.com and it's all the way at the bottom, but scroll down to the bottom and click on Candlestick Secrets and snag yourself that beast for free. It's really, really solid. So go through it. Everything you know about candlesticks is right there, my brother. Yup. Cabria says a lot of people charge $3,000 for this stuff. $3,000, that's it? Nah, man. That's like the beginner intro. Yeah, usually it's like tenner, a little bit of a 10. John says, question, where would you have gotten in on that trade? So we're still getting there, John. This is me just kind of walking through the pivots, the really, really key locations that you're trying to determine in, are people trapped, are people losing money? Because this line right here, again, I'm saying this could be a gap up or a gap down. We don't know yet in this example. I mean, I do know what it happened. But this would be, notice how clear of a line that is. So that's the thing. When you're looking at a pivot, it's not just, and it doesn't have to be just what happened in the last week. Really look at the candle. You can determine the trend. Trends up or down or sideways, but then really look to the left and find out how many people are buying or selling at this location. Also, folks, if you can do this for me, make sure you change the chat pane and Zoom to all panelists and attendees. Otherwise, I will be the only person that can read your question. Appreciate it. All right. So here's one other really cool little tip. This thing also gapped up on a Monday. I love Monday gaps. Or simply put, I love gaps that start a new week. Why do you think that is? Right? Matthew says, I can't imagine why. I don't know if that's sarcasm or not. I can't tell. But it creates a brand new weekly candle, right? So when you're gapping on a start of a new week, either Monday or if there's Labor Day or something, Tuesday, right? If the market's closed on Monday, whatever it is, you're gapping across a whole new level of pivots. You're not only gapping on a daily chart, but you're also going to be gapping on a weekly chart. Does that make sense? So when you gap on a Monday, ladies and gentlemen, I mean, you're clearing not only days of candles, but you're clearing weekly pivots as well. So gaps on Mondays are amazing. I do love Monday trading. Wednesdays are very, very profitable for me. I don't know why. They're my most profitable day. But Monday is close. Monday's up there. I love some gaps on a Monday. So this particular gap that we're going to look at did happen on a Monday. And for futures, I have an 80% win-loss ratio playing the first 60 minutes after the gap that happens on Sunday night. So for anyone who trades futures, yeah, I trade futures with a high probability of win-loss because it gaps every single Sunday night. I just play the gap. Jay says, I should take off Mondays to trade. Yeah, man. Nobody likes to work. All right, so let's get into the gap and how we actually played it and what we were looking at, because we did take this trade in the real life day trading room. So this gap was set to open here. Notice this purple line. I'm going to point to it with another color just so I can make sure everyone is aware. This is the entering price. So this is the entering price. That purple line is where it was opening that day. So remember that it hasn't opened yet, hadn't gapped yet. Nothing specifically special is occurring or going down right now. So it hasn't opened. So type in a 1 if you guys are cool with me on that. You know that it hasn't opened yet. The purple line is where it's supposed to open. The reason I'm bringing that up is because I don't think I did a very good job of bringing that up in one of my previous day trading courses. Everyone was assuming that I already knew where it was gapping. This is before market even opens. You can see in your charting software, or your broker, or Thinkorswim, Interactive Brokers, TrendSpider, TradingView, Wealth Charts, whatever you're using, TC2000, NinjaTrader, you should be able to look at where it's gapping. Like, where is it opening before the market opens? It's not hard. Pre-market, yep, that is correct. It should not be tough. So this purple line is where it was set to open. So you guys all got that point. Beautiful. Now, can you see how ridiculously strong of a gap that is? Look at how many pivots that thing is clearing on open. I mean, you're taking out these wicks, you're taking out these wicks, you're almost taking out that, but you're taking out all of this over here. And notice the purple arrow. What's so special about the purple arrow, you might ask? The purple arrow is pointing to a volume node. Now, there are many different styles of volume profiles you can use. I like all of them. I just like the ones on the bottom. I've just practiced those a lot. That's just my specialty. Doesn't mean that there's right or wrong ways to add volume or use volume. This is just a simplistic way to approach it. It's easier to understand for a lot of people right now. Notice these candles. Notice this volume. And I'm going to ask a very important question. Has Twitter ever closed above that price? Ever. On this chart? And the answer is no. So you're looking at this and we can see that the high, right? The high of that price, we've never really closed. We've gotten close, like that was close. That didn't happen, that didn't happen, that didn't happen. We got very, very, very close that day. But we never really fully closed above that level, above those wicks, and specifically above that bearish volume. We never closed above it. Cabria says it did cross on late July. That's true. Yeah, right there. But did it close above it? And the reason that closes are so important is because when you're trying to break a resistance, when you're trying to break a wall of bricks, do you want to bring a sledgehammer or do you want to bring a wrecking ball? Right? When it closes above a resistance, you have a much stronger indication that something's about to happen. when you just get a wick, when a candle flashes up and just gives a signal that it could do it, you still show really, really aggressive supply and massive, massive sellers who have still taken over and drove the price lower. Cabria says, wouldn't that trap buyers? Yep. So people who bought up here got trapped. Absolutely. That's correct. That's why it had such a nice sell-off the next 2 or 3 days after that. Right? Big bear candle, big bear candle. So all these people that did not wait for the close, they got trapped. And that's why you had some selling over that 5 or 6 day period. Matthew says, what about a close on the hourly, not a daily? So we're looking at daily charts right now, Matthew. You want to close on daily charts when it's above a resistance if you are looking for strong pivots after market close. Daily charts. We're going to talk about that a lot. Daily charts are always, always, always your primary chart when day trading to get and capture sentiment. Okay, cool deal. So the interesting part about this volume node, I'll repeat it, we did not, and we have not closed above it, but right now what we are doing is not only are we gapping above it, but we're doing it and we're gapping above that volume along with all the other candles on 1 day time frame. Prash says those 2 days of short selling with volume happened some time ago. Do people hold shorts for that long? So from here to here is 2 weeks. So the answer is yes. People absolutely will short for more than 2 weeks. Definitely. Just like you have held a swing trade bullish for longer than 2 weeks, people will hold a short for longer than 2 weeks. Why not? What if it goes lower? Yep. Short, people can stay in short for years, ladies and gentlemen. I mean, have you ever been wrong on a trade for multiple months before? Or is it just, it's been me? It's only me? Oh, okay. I thought it was other people. Sorry. I thought, so it's just me. That's fair. I'm the only one here that's ever been in a losing trade for many, many months at a time. I got it. Someone asks, so this person thinks it could still go lower. Yeah, exactly. So the bear traders, right? There's always two sides. The bear traders are thinking this is about to happen. That's what they see. Brett says, do puts show up in the volume profile as shorts or just people who sell short? Good question. Just people who sell short. Option volume, in my opinion, does not impact or affect stock price or movement at all. There's a lot of courses that will tell you it will, but I've taken all the courses. I've done all the back trading. It's still 50-50. It doesn't give you a discernible edge at all. If people are like, oh, there's a whole heap ton of puts being bought on this one stock. Okay, and maybe they're buying it as a hedge because they have millions of shares and think it's going to go lower. They want to protect themselves. It doesn't have to be a bearish trade just because a lot of people buy puts on something. But that's a very good question. Super good question. All right. So again, bear volume, we've never closed above that, and we were opening and noticing volume, my friends. If you want one really, really cool secret that can absolutely revolutionize your trading, focus on volume. Volume is huge, massive, so crucial. Example, right here. Is that a lot of volume or a little bit of volume? It's a lot of volume. Yep. How do you think all the people who shorted there felt when just a few days later, we gapped above all of that bear volume? Just a few days later, we gapped above all of that bear volume, right? We had a bear candle. We came right back up to that resistance. The bears are like, yep, we're about to roll over. Did we? Nope. Not only did we not roll over, we actually gapped above both bear candles. So you gap above all of these shorts and this guy or girl. The market's not sexist. It doesn't care. So guy or girl, whoever's shorting on that bear candle gets absolutely smoked when it gaps above it. So he gaps above it. How do all the shorts feel? They're losing and they're getting squeezed out. Michael Holt says to all panelists, so high volume bear candles means lots of shorts. That is correct. Tyler says, how do you know it's people shorting and not people selling shares they own? Tyler, it's always both. It is always both. Secondly, the other thing, Tyler, is have you ever sold a position to only see it go higher, get pissed off, and then get back into the trade again because it's going higher and you have FOMO and you're missing out, so you get in? Or is that just me too? Shoot, I'm the only one that's done that also? Dang it. I am a terrible trader. Wow. But you get the point? So you sell and you're like, man, I made a lot of money. And then the stock goes higher and you're like, I'm an idiot. And you get in. That's another thing that's what's happening. That's the other aspect is when you have a bear candle like this, yes, it's people selling to close long positions, but it's also people shorting. So you have both sides of the coin. You have people who sold locking in a profit, stock goes higher and they get back in because they have a fear of missing out. It's a great question. All right, cool deal. I think we're doing good. We're doing really well. Okay, so this is the stock chart of the day about halfway through the day. So when this candle was still forming, this was all real time, by the way. So when this was forming currently, present moment in time, I took a screenshot of this gap. This is what the candle looked like at that time. So what we're about to do is we're going to go into pre-market 15 minutes before the market opens to show you what the pre-market looked like and to give you my thoughts. Type it a 1 if that sounds like a good plan from here. All right. So we know the stock is gapping. We know where it's opening. This is just an image of what the stock did. And now what we're doing is we're zooming into 15 minutes, 9:15 a.m. Eastern. The stock market opens at 9:30 a.m. Eastern. So this is 15 minutes before market open. I have not seen what the stock is going to do yet in this example. Matthew says, I feel like I should be paying for this. If you feel that way, Matthew, go tell other friends, tell them to join this class. This is only class 1. We got a lot left. But hey, man, I appreciate that kind words. Thank you. All right. So 15 minutes before market open, this is what we're looking at. Let's talk about what's really interesting on this pre-market chart, because there's a lot here. There's a lot of really, really useful information. Number 1, notice this is a 5-minute chart. Does this 5-minute chart kind of look like the daily chart a little bit? A little bit. Like you got, look at this clear resistance right here. I mean, super obvious. Boom, boom, boom. By the way, people who sold short there, did they do it a second time? Of course they did. Okay, so if they short, did they sell short there again right here? What do you think? Yeah, of course. Why not? It worked once, it worked twice, they'll do it a third time. So now what you'll notice is this resistance is beginning to pile up. You have numerous really clear resistance levels on a 5-minute chart. What is this stock doing on a 5-minute, which is over the span of 3 days? So over the span of this 3-day chart window, can you clearly see how many pivots it's gapping above? I mean, this whole day is trapping everyone there, but I mean, this is like a rock of a resistance, and it's just barely, just barely itty bitty gap above all that resistance. What I like about small gaps like this is that bears who are trapped are not as afraid to buy to close their position because they're only losing small at that point. Bear traders who are losing really bad, unfortunately, will keep holding for a while. Most traders do. once you get into a position and you're down 80%, who's ever said this before? Well, I'm down 80, so how much lower can it go? Whatever. I'm only losing 80%, so might as well go to zero. No way. I'm the only one again? I'm just kidding. Everyone here is like, yep, I've done that. Might as well see what happens. I'm only down 80%. So people do it all the time. It's not just you, it's everyone. This is natural sentiment. Might as well just find out what happens. So when they're down small, though, when you're just barely down, you're like, whatever. Someone once told me to just lose small, so might as well lose small. And they get out of a small losing position. So that's what I like about small gaps, too. I'm kind of a fan of that. All right. Now, one other thing, and we're going to talk about this a little bit more in the next class, but is this day a bullish day or a bearish day? What do you think? Is it a bullish day or a bearish day? So we opened here, we closed here. So it's a bullish day with a little bit of an upper shadow and a little bit of a lower shadow. So it's a bullish day. Now, why is that impactful? Because you do have some people who bought in this trend, and when they bought here at 39 and they bought 1,000 shares, do you think they're going to sell at 39.70? Why would they not? So you're going to get a little selling. You're going to get a little bit of a retest. You're going to get some people who are going to lock in some profit. And you'll notice that you can kind of already see some of that pre-market. And then you have this candle, this behemoth. I mean, that is amazing. That's like walking into an ice cream parlor and they look at you dead in the face and go, hey, all the ice cream you want is free forever. Enjoy. That's what that candle says to me. It's an extremely indecisive candle. And when I'm trying to take a trade, I love indecision because indecision eventually becomes a decision. So this is called a high wave candle. You can Google them. It's not my name. I didn't come up with it. I don't remember the first time I heard it, but anyway, it's a high wave candle. That's the name. It has a big upper shadow, big lower shadow. Prash says, not a lot of volume. Why does it matter? I used to ignore these if it has no volume. Because it's indecisive. Doesn't have to have a lot of volume for it to go higher, my dear friend. Great question, but very important to keep in mind. Because remember this and remember this always. The stock market moves based on people buying and selling. If you don't have a lot of sellers, what is the stock price going to do? It's going to go higher. Yeah. I mean, if you don't have a lot of sellers, the market has to go up. Why? So that it can fill more seller orders. And if there's no sell orders out there, it's just going to keep going higher. So an example of something like Tesla that's going to keep going up for a while, no one wants to sell their Tesla position. I've talked to thousands of traders and they're like, nah, I'm good. I'm just going to keep holding my Tesla. So that's the way the market works, right? As the market goes higher, people are willing to sell more. Therefore, the stock will eventually go and get driven up higher by the market to go find and produce and create sell orders. So when you have low volume, that does not have to be a bad thing. The market can easily go higher on lower volume. So that's a very, very good question. But is that an aha moment for a lot of people? Because many, many traders say, oh, I only get into a trade if I have a lot of volume coming in. When I have a lot of volume coming in, that's when I get out of a trade. You want to get in when there's a little bit of volume. That means no one really knows about it. It's kind of new and fresh. If you get in when this candle comes and look at all this volume. Look at all that volume right there. I mean, a lot of people go, it's breaking out. I mean, is it? It's like it did go higher. If you bought here, you could have captured some. You could have captured a little bit, but why not just wait and then buy back here when it comes all the way back down to trap all the people who got in overzealously and didn't sell in the first place. So again, for me, this is just the way I trade. When I see volume like that, I'm a seller if I'm already in. And if I'm not already in, I'm going to wait for it to come back down to that volume price anyway, because it generally does. Make sense? Nice. Good questions. Matthew says, I was under the impression it needed volume to move, but thanks. I didn't say it doesn't have to have volume. It does have some volume. It just doesn't have to have a lot, like millions and millions. Like you could have to have volume to move, but it doesn't have to be an insane amount of volume. All right, cool deal. So let's keep pressing forward and analyzing this chart and talking about the pre-market data. So what we have here is at this point, this is what you know. 15 minutes before market opens, this is what you should know based on what we've already covered. And this is the mental procedure and process that you need to be thinking about in every single situation. Number one, I plan on trading Twitter bullish. Why? Who can repeat that for me? Who can tell me why we already know that we're trading Twitter bullish? Because of the trend. Boom, that's it, done. All right, awesome. Number two, now that I know number one, I'm going with the trend because it's easier. I'm going to make more money more frequently going with the trend. Number two, I'm going to do one of three things. Now, this is the strategy piece. Again, at this point, 15 minutes before market open, I know I keep drilling this in, but you should be able to easily come up with what you're doing before the market opens. You don't have to feel rushed at 9:30 a.m. to, oh, I don't know what's going on. Like you can easily just sit down and start carving it out before market opens and be okay. These are the three things that I do all the time. Now, when I talked earlier about picking a strategy, these are an example of picking a strategy. You go with either A, B, or C. As you become more proficient, you can start doing all three or none of them if you don't want to, or a different version of something else. But this is what you can do. These are some of the three things that you can approach. I'm going to wait for either the breakout of pre-market with a stop below pre-market lows, a bear candle on a smaller time frame, and I'll take a breakout of that, or I wait 30 to 50 minutes for the retest, pullback, or retracement, look for an indecision or reversal candle, and then I play that. Those are the three things that you get to decide what you're doing. Now, do you remember in a previous slide where I said the hardest thing about trading is not trading? That's this one right here, C. That's the hardest one. Waiting for 30 minutes. Jerry, are you insane? I need to make money. I can't wait 30 minutes to make money. Are you a madman? I need to make money in the next 30 minutes because the market is only open until 10 a.m. Eastern. Monday through Friday, the New York Stock Exchange is open from 9:30 a.m. Eastern until 10:30 a.m. Eastern. And if I don't make money in that 30 minutes, I'm a moron and I'm wasting all of my time and money and I am stupid. The cool part is subconsciously, every one of us here watching this video has said all of those things almost every single day. Am I right? Can I get an amen? I don't know why I do that, but I do that so frequently. And I got to remind myself, Newsom, bro, chill out. Can you take a chill pill for a second? You're not stupid. The market allegedly is going to be open tomorrow and until 4 p.m. Eastern today. Just take a deep breath. The harder you try for something, sometimes the worse the result you're going to get. Like in a relationship. Have you ever tried really, really hard and just pushed the other person away? Because you're just all over them? Shoot, just me again? So I'm just talking to myself all the time? Oh, crap. Just me. Got it. So anyway, we get the point where sometimes you just have to wait and relax and be calm and be cool and let everything come to you rather than pressing it all and forcing it away. Because when you start forcing and pressing and going, you get out of alignment. You want to be in alignment with your body, mind, and spirit and soul, and just be okay and let things come to you and enjoy the miracle of understanding that the universe responds with vibrations. And if your vibration is all force and push, if you put a bunch of money on a table right in front of you and you have a forceful pushing vibration and you take your hands and push the money off the table, how much money are you going to have? But if you have a giant pile of money on the table and you sit back and you relax and you go, wait a minute, let me have a relaxed pulling momentum. Let me take my hands and pull the money towards me rather than push the money towards you. It works better if you relax and let it pull into you. Did I go a little too deep there? Is that okay? All right. So David and Brett are asking about which one works best, A, B, or C. We're going to get to that in just a few moments. So stick with me. All right. Here we go. So this is going to be A. What we're going to do is we're going to review the A setup, the breakout of pre-market resistance with a stop below pre-market lows, taking the high wave candle approach. The high wave candle approach, meaning you look at the high wave candle, you get in above there, you set your stop below there. Now, check this out. I love this trade. It's a really, really super simple, obvious, gorgeous, delicious trade. Unfortunately, it's also the most obvious. This is what every noob does ever. Maybe not exactly this, but pretty much. I mean, this is the most basic of all strategies. Cabria says, this is your pre-market. Yep, I'm still pre-market. Market is not opened yet. Still 15 minutes before market open, going through the strategies and percentages. So if you play pre-market high breakouts with the stop below pre-market lows, you're losing about 68% of the time. Brett says, buy high and sell lower. Yep, that's been me. So if you lose about 68% of the time, that's because you're doing this. Now, is there a time and a place to do this strategy? Yes, absolutely. But it takes a little bit of practice to really, really know which one it is. It takes time, takes a little bit of practice. And even if the trade is amazing and incredible and phenomenal, you can still have a situation where you're going to lose. What I like for a lot of traders to do when you start trading is do this one. Do ultra conservative stop losses. You'll still lose about 47% of the time and you'll only win small, but it will help you stay in trades longer. It'll help you build up your holding muscle. It'll help you practice your broker entry orders and all that kind of good stuff. And it'll just overall, in general, help you calm down about your trading. Most traders picture day trading as like some dude in Miami with a bunch of screens, chain smoking cigars all day, just being super aggro aggressive, like alpha male, and like throwing TV screens out the window. You know, I personally like to picture a nice, sweet 67-year-old retired teacher who has $400,000 in her IRA, sitting down, taking 2 or 3 trades a week and making $1,600. Gina says, it's now vapes, not really cigars. Right, true. But again, you got to understand that it doesn't have to be all aggro alpha male style. You can do that. It can work, but it doesn't have to be that way. Give yourself some time to find your flow and what you want to do. Because here's the thing. When you're taking this really, really obvious trade, it works just not all the time. You have to be a great loser for trades like this. Now, this is a hint to increase your probabilities of success. Number one, the more bear candles pre-market, the better a breakout of pre-market high will work. Number two, the excitement of the stock on the daily chart. That one is the one that takes practice. Number three, how quickly you exit the winner, because this trade is almost always a winner for a certain period of time. 68% of the time, in fact, this position will always be winning, even if it's for like 9 seconds. You will have a positive P&L on this type of trade very, very high percentage of the time. Even if it does like, boop, boop, you're like, I was profitable for like 9 seconds. Yep. That's usually what will happen a lot in this particular strategy. So these 4 things can help you a little bit perfect the high of the day breakout, because it is a very easy strategy. It is super, super simplistic. I love it. I do it very frequently, but you have to really nail it down, because the stock market never makes anything insanely, insanely obvious. Most of you didn't think that Tesla was going to go higher for the longest time until like, I don't know, weeks ago. People are like, okay, fine. Tesla's going to go higher. Now, here's the thing. Number 4, since this is the easiest of all day trades, it has a 32% win ratio according to my own back tests and studies. So anytime you're doing something really, 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 really simplistic, on day trading, not long-term investing, day trading, if you make it super basic and way too easy, you're going to have a lower win ratio, because this is still a profession. All right. So what we're doing is we're still reviewing a breakout of pre-market high. We're still reviewing the A strategy, breakout of pre-market high with a stop below pre-market resistance. Now, why is this one working so well? Jeremy, you just said that the breakout of pre-market resistance only works 32% of the time, and then you show us this gem, like this Barry Sanders highlight reel run to the end zone type of candle? It's because of the daily chart, right? The daily chart had loads of sentiment. I mean, it was gapping above so many pivots. It was trapping so many people. And remember how I talked about you have to have a lot of bear candles pre-market? Look how clean this pre-market resistance is. I mean, look how like, oh, and then right before market open, you have this bear hammer, and then you have this little bear hammer with an upper shadow and a lower shadow. And notice how the lower shadow just barely goes below that pre-market pivot, probably stopping some people out. So it's a really, really good pre-market breakout setup because of all the other factors we talked about. The excitement on the daily chart, the pre-market chart has a spellbinding high wave candle. I mean, delicious. That is a mentally delicious high wave candle. I see that, I take the trade. That's how I play it. I see those candles, and I'm like, all right, well, that's going to be my setup. Boom, boom, boom. All right. So check this out. Here are what you would do in this situation. Notice the huge amount of volume. Do you remember something recently about me telling you about huge amounts of volume coming into a trade when you're already in it? What if it goes higher? Well, you could do a few things here. Exit some of your position and increase your stop. That's one thing you can do. Now, can you exit everything in the first 5 minutes? What do you all think? Sure you can, right? You can do whatever you want in trading. But you're going to want to exit something, either a fourth at the most. If you're going to exit more than a fourth of your position, you might as well exit everything. That's just my opinion. So for those people who are exiting half, I mean, half is a lot. Half is 50% of what you got. Brett says, does this strategy work with options with Premium Decay? Well, if you're buying options, you don't really want the premium to decay, Brett. But if you're buying options, yeah, it works extremely well because it's just charts. So it has nothing to do with options. It's all momentum. You have to learn, in order to learn how to trade options, you have to learn how to trade. So yeah, man, it works with everything, just not all the time. And if you're trying to sell options to take advantage of Premium Decay, then yeah, this strategy works also. but you don't really want to sell premium decay on an up candle. You would really, really want to prefer to sell it on a down candle. Gives you more premium that way. All right. So one of the things you're going to do here is exit some of your position or a quarter at the most and or trail your stop. Keep in mind about stop movement. This is what your stop should be. Anytime you move your stop, you want to ask, where is everyone else moving their stop to, and do the opposite of that. Now, this is just for me. I'm trying to teach from experience. I always prefer to sell into strength rather than getting trailed out with a stop. Selling high just feels better and often results in larger wins anyway. Now, what if it goes higher? It will. But what if it goes higher? It will, always. You are not good enough to exit there, and then this happens. So don't worry about it. It will always go higher. Always, always. Everything, everything. It's always going to go higher after you sell it. So be prepared for that. Secondly, remember, this is day trading, not investing. Day trading is about carving out cash flow to go do things with that cash. Invest in real estate, start a podcast, build a business, get your hair did, get new nails, buy some shoes, buy a car, whatever. Take a trip, travel, donate, give. Cash flow is king. When you're investing, yeah, you can trail some stops because it's going to go higher, probably if you're investing in an okay company, most likely over time. So this is just my preference. I like selling into strength. It just feels better. I mean, if I have a stop loss and then this happens and then it goes up or goes down, I still go, oh man, but I could have sold there. I just like selling high. It's kind of my thing. All right. So when I'm doing this particular trade, in my opinion, since it was literally just one candle, you can absolutely sell some, again, a quarter at the most, and then just increase your stop. So as we were talking about earlier, when you're getting into a trade, most people are going to go, all right, I'm going to put my stop right there or right here. So I would do the exact opposite of that. Regardless of where I have my original stop, either the conservative or the aggressive, I'm only going to move it very, very small until I stay in the trade another 10 or 15 minutes, and then I'll move my stop more aggressive. I like holding trades. Now, why sell here? Why not hold for more? So on and so forth. Could you just trail your stop? What if it keeps running? It will. Could you just trail your stop? Yes. Why not hold for more? Go for it. Why sell here? Because I'm trying to make money. Those are the answers to all those questions. For me on this particular trade, this is an amazing, amazing trade. Exit a quarter right there at the most. Can you exit 10%, ladies and gentlemen? AKA 1/10. Yes, you can. Can you exit 1/8? Can you exit 1/16? Can you exit 1/32? Can you exit 1/145th? I mean, you can do whatever you want, but sell something is what I'm trying to get at. Always, if you're in and boom, you get that really, really big bullish candle, at least sell something because it tells your brain, okay, I'm going to win a little bit on the trade and I'm reducing my risk. And then barely move your stop, just a little bit. Now, Cabria wants to know, why am I selling at this target? This candle right here is when I created the target. Why? Why would I put it there? Once that candle came in, I said, okay, I'm going to put my target right above. Simon says that is a new high. That is correct. New high. I sell at new highs a lot. I also try to find what I call an S-curve. And if I can see a clear S-curve, which is where a stock trades up, trades down, and then makes a new high, I sell at the new high. How often? Almost always. Unless it's an absolute slayer of a gap, and I've been planning it for weeks, and it's Tesla, I just want to stay in, then I'll keep holding it. But generally, if it makes a new high, after doing an S-curve, I just sell. So the question becomes, could I have sold here? Right above the high of this candle? The answer is yes, I could have. Why didn't I? simply because I was trailing my stop at that point, right? Once this candle came in, I moved my stop up and I went and looked at something else. And I didn't really have a target in yet. That's really it. Could I have sold there? Absolutely. Because that's just selling high. That's putting a target at a high spot to just lock in your profit. Most traders fall victim to the hot hand mentality. When the stock is going up, oh, it's going to go up forever. No, it won't. Trust me. Not forever. It'll go up for a while, and you can make a lot of money, but it won't go up forever. You'll have a really, really fun, ginormous crash at some point. John says, could the long candle retested? This one, stay tuned. All right, so that's the breakout trade, the pre-market breakout high wave candle, finding the trade on the daily chart based on one of three factors. You're focusing on just one stock all the time, you're focusing on one strategy all the time, or you're focusing on a select group of stocks that you're watching often. And then you look at the trend, find out who is trapped, and then place your entry where stops are, right? Are bearish traders placing their stops above this pre-market high, hoping that it does not go higher? And the answer is, of course. So once it goes higher, it really starts rocking. Philip says, what time frame are these candles? So the time frame is here on the top left-hand side. This is the 5-minute chart on Twitter. I will narrow down into the smaller time frames in just a moment. All right, so now what we're going to do is we're going to review B. So this is what B was. If you remember, strategy B was find a bear candle on a smaller time frame and take the break out of that. What the heck is a smaller time frame? 5 minutes is as high as I will trade in day trading. I do look at 15 ever so often, but I don't really trade off the 15. I just look at the 15 to see what the candles are doing. I trade off 5, 3, and 2. We're going to talk about that more in a little bit. But when I start narrowing down into smaller time frames, I'm talking about 3 minute, which look at the top left-hand screen. See that 3? That's what that means, 3 minute. 2 minute. Those are the main time frames that I trade. I come before you today letting you know I am not a great 1 minute trader. Why? Don't know. Haven't figured it out yet. I'm not great at it. Sorry. I know you guys want me to be amazing at everything, but 1 minute charts, not my specialty. Ricky Cadden, who is the CEO of Real Life Trading Australia, is the greatest 1 minute trader I've ever met in my life. If him and I had to trade 1 minute charts, he would take all of my money every day. I'm not that great at them. So I've learned that lesson. I don't trade 1 minute charts. I trade 2 and 3. Why? Because I suck at 1 minute. That's it. 1 minute charts are just fast. I love candles. I'm just not amazing at it. So that's just my thing. I realized that in an early time frame, and so I just stick to 3, 2, 5. That's pretty much it. Is that cool? So here's the thing. For me, a smaller time frame is 5 minute, 3 minute, or 2 minute. Can you do a 4 minute time frame? Asks Lisa. Sure. Yep, 4 minute for right now is less than 5. So as long as 4 is less than 5, you can absolutely nail down to the 4 minute chart. And what we're looking for is bear candles. Why bear candles? Why not bull candles? I'm looking for bear candles because that is short sellers getting in, and I love when short sellers are trapped if I'm going bullish, AKA Sir Trapperton. All right, I'm looking for Sir Trapperton to come in and trap some people. So this would be the setup on the 3 minute chart. Now notice, right, this is not a bear candle. On a smaller time frame, we're going to a smaller time frame in just a moment. You'll see the bear candle on a smaller time frame. But what I like about taking this particular trade, what I dig about it is I like the fact that this candle does have an upper and lower shadow. Because again, do you have to take a bear candle breakout? No, not necessarily. You can wait for that, and you can plan on it, and there absolutely is one that comes in and you're able to take that trade. But I like this candle because it does have an upper shadow and it does have a lower shadow. And most importantly, it closes above pre-market resistance with good volume. So it does close above pre-market with good volume, but it still has an upper shadow. So the upper shadow says that some people are trying to short, some people are trying to short sell it. So if it does go higher, whoever created that upper shadow is either trapped because they're short or they have FOMO because they sold too early and they're going to get back in. But remember, keep in mind, the other reason that I would take this bullish candle is because of this. It's all about the daily chart. If it's a really subpar B plus gap, I wait for bear candles. If it's an A plus high tier, cream of the crop, premium type of gap, I will play pretty much any indecision that I can find in that direction of the gap. Now, here's what's really cool about Twitter. This green line would be your entry. Twitter is a very liquid stock, so you can use a stop market. Stop markets are pretty appropriate on Twitter. So again, when I say stop market, rather than using a stop limit, you can use a stop market because Twitter is pretty liquid with pretty tight spreads. So you really wouldn't necessarily get a bad fill. And normally what you're doing is as this 3-minute candle is forming, right? As it's forming, you would be setting up this 3-minute entry. Now, the aggressive stop loss, you'll notice you're going to lose this particular trade on the B, right? Taking the smaller time candle breakout. Having your stop loss, you're going to lose about 50 or 7% of the time, but you're going to have some solid wins. And your conservative stop loss on the waiting for the bearish candle or the indecision candle, the candle with some upper shadows, a little bit of a conservative stop. You're only going to lose 38% of the time, but your winners will be smaller. Make sense? Cabria says, what is a stop market? There's an entry order on where to get in. Yeah, it's an order entry in your broker. Stop market, you can get in or get out with a stop market order. All right, cool deal. Very, very nice. So again, this is the going down into the time frame. Because remember, we saw the 3-minute chart. This is zooming into the 2-minute. So the 2-minute chart, check this out. Look at this 2-minute chart. So notice that we've lowered the time frame. Is this, my friends, a bear candle on a smaller time frame and you're taking out the high of the bear candle? Yes or no? And this is what I look for every single day. High wave candle pre-market followed by a high wave candle at open, and I get in above that candle. That's it. That's what I do. That's me every day. You can take a screenshot of this, and this is all I do every single day. This is the pattern that I have perfected. When I say perfected, meaning I trade it all the time, I still lose a lot. I get punched in the face more than Mike Tyson's punching bag. But I get paid a lot of money to do it. So I'm like a really well-paid sparring partner. You know? So check out the red lines. These red lines are what your stop losses could be. Do you notice the Captain Insano meets the hindsight stop loss? That's as tight as you can get. That is a 15-cent stop loss on Twitter that has an average true range of $1. So you're going to lose about 77% of the time on that stop. But as long as you can be okay with losing that much, you're going to have some huge wins. Or if you get back into the trade or whatever, because this will happen a lot, this will happen a lot, you're going to get some whipsaws. But if you know what you're doing and you start really mastering the craft of these tight trades, you're going to lose a lot. But when you have big winners, oh man, this would have been a massive win. It would have made your month if you did the Captain Insano meets Captain Hindsight stop loss. Then the conservative, relatively aggressive blend will be right below the previous low candle. If you're up nicely for the month, you can easily do this because you have R's to spare, right? If you're down a lot on the month, you're probably going to go with a more conservative one to lock in the win so that you only lose 38% of the time, but your winners will be small. So my average stop loss is usually down here at the beginning and the end of the month, depending on how well I'm doing. Brett says, is this strategy for all bullish gaps or does it need to be really good like this one? The better the gap on the daily chart, the more likely it will win. That is correct. Yep. So go find really good daily gaps and this strategy works amazing. So that's, again, the B section of this trade. This is the 1 minute chart. Now, again, I will show you the 1 minute. I did not trade this on the 1 minute. But Ricky Cadden can because he's a machine. He's not actually human. He looks like a human, but he's not. So on a 1 minute chart, as soon as the bear candle closes, which is this candle, sorry, I said on a 2 minute. On a 1 minute chart, as soon as the bear candle closes, you're setting up the entry. So when this candle closes, your entry is boom. It's in the broker ready to go. Now, if you're a really, really amazing trader and super, super fast, you could take your entry, drag it down to here, and put it above the bear candle. And when you do that, it gives you the ability to take your stop loss and lower your stop loss equal to how much you lower the entry, and it gives you better risk reward. For me, this is the most popular thing that I do. I simply look for, and I know this sounds very simple, guys. I look for decent daily gaps where people are excited on a stock. And I look for bear candle breakouts and I get in above those. And very frequently it's on the exact same stocks all the time. Beyond Meat, Pinterest, Tesla, AMD, Tesla again, Apple, all right? I'm just reading my trading journal at this point. So I will trade the same stocks over and over. If people are excited about it, if there's a lot of momentum, if a lot of people are talking about it, this is just what I'll do. Wait for a good gap on the daily, wait for a bearish candle, get in above there, stop below there, done. That's it. Over and over and over and over and over again. Thousands of times a year. Maybe not thousands, but hundreds of times a year. Now, I don't know what just happened. Any questions about that? And then we're going to dive into the C portion of the what to do in this situation, which is waiting 30 minutes. And then I'll talk about what you would look for. Because again, they have 3 approaches to any type of gap, and these are the 3 approaches. Matthew says the bear candle has to be above pre-market resistance, right? Yes. Good question. Next question. Anyone else? And again, if you have to ask a question later and it pops in your brain, all good. So we have about 20 minutes left. Are you guys doing okay with me? I want to give you a lot of value since you paid tons and tons of money to be here. I want to do my absolute best to give you all of my energy and insight information. So you guys doing good? All right. Awesome, awesome. Let's go into the C. The waiting 30 to 50 minutes for the retest / pullback / retracement. They all mean the same thing. They all mean the exact same thing. Retest, pullback, retracement. So what you're doing is you're going to be looking for your indecision reversal candle and you're going to be playing that. So notice this is a 5-minute chart. You'll see that Twitter traded up and now is pulling back, AKA the S curve. Very, very popular strategy. I do it all the time. I like it a lot. It's really, really solid. What I like to do is wait for a reversal candle. So the reversal candle is this one. Shooting star inside bear candle. Because what it did right here is very simplistic. This support from that candle, the support from this lower shadow, and blink, we just barely went lower. Not a lot, just a little bit. So my theory is quite simple in this situation. Okay, it should do this because it's breaking support. That's what the bears think. But the trend is bullish. So all I'm doing is looking at getting in above these candles, these reversal candles, especially if I can find something else. So this is what it looks like with the extended hours turned off. So I'll go back a chart. Notice these are the extended hours right here. Extended hours meaning the moving averages are going to be different because you have different data in the extended hours. And over here, the extended hours are turned off. So it just looks a little bit different. What I'm doing here is I'm simply saying, and this is a very, very important concept, I don't think it's going to go higher than these candles. It probably won't. But if it does, these candles, there's a lot of bears getting in right here. And I can see that because it's breaking support. So if it keeps going lower, awesome. But if it does go higher, I'm going to get in above where all the bears are going to have their stops. So I'm just simply looking, as Matthew says in the chat pane, you obviously see what the bears are doing. Look for their stop placement and get in there. Exactly. Yep. So the bears are doing this. Cool. You're not going to get in anyway. And if it does this, then the bears who are getting in now with this volume are going to be trapped and you have a better place to get in. Tyler says, aha moment. Yeah. Nice. Now we're going to talk more about moving averages in class 4. But if you want to wait until the stock gets above the moving averages, I love that idea. So what I mean by that is get above here and then get in. We're going to talk about what this does in just a few moments. I'm absolutely fine with that. I have no issues with that at all. But all I'm saying is this is the point where I begin to look for the bounce because I can clearly see the S-curve, the retracement, it's pulling back. It's at a very obvious support. It threw in a little bit of a bear trap. It should go lower. I'm not going to trade it bearish because that would be against the trend. But if it goes higher and stops those people out, then I'll get in. And maybe it works, maybe it doesn't. Don't know yet. Not sure. All right. So here's what it did. And what's really, really cool is this candle should have been like, hey, lady, do you want to make some money? Hello, sir. Do you want to press buttons and get paid today? I mean, look at that hammer. Look at that lower shadow. So did we get triggered in bearish when this candle came in? And the answer is no. But some people who are in this trade bearish did get stopped out. Some people who were bullish got stopped out. That's a perfect trapping candle. That is what I wait for when I'm playing retracements. So I will not play a retest of a move, aka the S-curve, unless I can see some traps placed in here. Unless I can see a reversal candle, hammer, some type of trap, I just won't do it. Jeremy, what if it goes higher? It probably will. And you're not going to make any money? I guess not. I guess I'm just going to have to sit on the sidelines and wait until tomorrow. So let me repeat that one more time. On retests later in the day, I only play them if I can clearly see a trapping candle. And everyone here should know that this is a trapping candle, right? Right below the moving average. People are probably shorting. They think it's going to go lower. They don't. And here's what's really, really cool is type in a 1. If you remember me just recently saying you could wait until the stock is above all the moving averages to then get in. So if you don't just set up the trade to get filled, what you could do is this candle comes in. You're like, all right, cool. This candle comes in, this candle comes in, this candle comes in, and then boom, that guy. And that guy is free ice cream for life with no health consequences. Wait a minute, are you saying I can eat all the ice cream I want and never gain weight or get fat or get diabetes? What? Because notice how it closes above the moving averages. Notice how you had a really good trapping candle. Notice how you had a sideways consolidation, and notice how you're above the moving averages. Would you like to notice and look at how you're above the moving averages? How the moving averages are below where the stock is currently because you're above the moving averages? Oh, man. I'm such a nerd sometimes. All right. The point I'm making is we're going to talk about that in class 4, but it's just a higher probability that instead of just getting in right here, you can begin to plan. All right, I want to get in, but I really want to get above the moving averages. So once it does that, bam, your entry is over here, your stop is somewhere over here, and you're going to ride that little train up. Now, later in the day trades, one mistake that people do is you hold them way too long. The later it is in the day, the less far it's going to move normally. Not always, but this is rare, where it just goes to the moon, okay? That's pretty much what Tesla does, and that's about it. It's rare that stocks will just boom, retrace, and then just go to 1 million in one day. Usually you'll get one of like blah, 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 something like that, and then it closes. So you can make money here, or you can make money here, and that's really about it. Reed says, but there is a 2 p.m. pump crew, bro. It depends on the time zone. Sometimes it pumps, sometimes it doesn't, man. Wait until you take and start trading in a bearish market and see how well that 2 p.m. pump works. Oh, man. It's real fun when you actually trade when a market's going down. Brett says 3 minutes is fine instead of 5. Yes, sir. Absolutely. Usually later in the day, I will look at the 5-minute chart a lot. Matthew says, is it harder to trade in bearish markets? Nope, it's easier. John says, how can you trade in different time zones? As long as you have internet. Cool. All right, so that's pretty much it. Nicely done. I like it. So again, really, really good retest. So let's go look at a few real life examples really quick. And go ahead and pull up some stocks that you guys care about really fast, and I'll jump into them. And we'll just look at 2 or 3 examples. Daniel says Micron. Let's not use Micron because that's going to be one that we're going to talk about in just a second. Boeing. All right. So Boeing, perfect example. Okay. What is the trend on Boeing right now? Go. What is the trend? What is the trend? What is the trend? What is the trend? Sideways to down a little bit. Yep. Sideways to down. Correct. So ready for this crazy, wild, insane thought process? If a stock is going sideways, should you hold it for a long time thinking it's going to break out? No. No, not if you're day trading. Because what's the chances that you're going to be on a day trade the day that the sideways move breaks out? What's the chances? I don't know the percentage, but it's small. That you're going to be in the day that it breaks out. So when you're trading sideways in a sideways market, get out as quick as you can when you're profitable. So for example, on Boeing, let's say Boeing gaps up to here tomorrow. Would people be trapped? Yes or no? And the answer is yes, you'd have some people trapped. What if it gapped up to here tomorrow? Would more people be trapped? The answer is yeah, more people would definitely be trapped then. But would I still get in and get out of that trade very quickly if it opened in the green line? And the answer is yes. Why? Because it's sideways. But Newsom, what if it does this? And you miss all the move? Well, I wouldn't have missed all the move because if it does gap up, I'm going to play it and capture some of it. And then guess what I get to do tomorrow or the next day? Would anyone like to take a stab in the dark? right? I make my money and I'll just trade again. Like I'll wait for the pullback and I'll get in later on Boeing. There's another day tomorrow. You don't have to make all of your money on day one. Because this is not trending right now. It's still going very sideways. And you can see you've only had 2 nice breakouts anyway, and those eventually went lower. So there's a breakout and there was a breakout, and they eventually went down anyway. Antoine says Zoom. So Zoom's going to be fun. Zoom's going to be interesting because this one's gapping up right now. As we speak, it's up like 27%. So here's a 5-minute chart. Look at Zoom. It is at $400 right now. Incredible. $400. So we're going to talk a little bit about gaps in a future class, but opening at $400, who's more excited on Zoom? Bulls or bears, in your opinion? The answer is bears. Bears are more excited. Bulls are extremely profitable. They're excited to sell. Now, is it going to go higher? Yeah. Is it most likely going to sell off some at some point? Yeah. So could you make some money in the next 3 or 4 days trading at bearish if you want to? Yes. What if you can only trade in the direction of the trend? Are you going to trade Zoom bearish tomorrow? No. And so there you go. It's a really, really simplistic approach where you have your strategy, you have your idea, you have your rules, and that's it. That's what you do. Brett says, with the hammer candle, if there had been massive bearish volume after 3 or 4 bear candles, would you enter at the close of the hammer instead of waiting above the moving averages? Yes, I would have, Brett. Great question. So again, on Zoom, Zoom is gapping, and this one is moving extremely, extremely bullish, and you have tons and tons of buyers in this trend. So those buyers at some point are going to want to sell and lock in some profit. So it's going to be a really, really interesting one to find out, but I'm excited to see how it plays out. I personally love playing the smaller gaps. It's more my thing. So what I'm going to do is, someone mentioned Micron just a moment ago. I'm going to show you how I plan most of my day trades. This is a recording from just a few days ago for those who are here live. This is the Finance Friday afternoon swing trading room. Some of you who are here subscribe to this. Most of you don't, and it's okay. I still love you. But I have a live afternoon swing trading room that goes from 5 to 6 p.m. Eastern Standard every day, and it is a paid service. But I do this type of analysis. So what I'm going to do is I'm going to click on this video, and we're going to listen to the analysis that I do. I just want to make sure that the audio goes through. So give me one moment. All right, I think that'll work. Okay, here we go, and I'll click play. That could be one to watch. 2 more, Micron. So Micron, I'm all about getting some shares put to me at 42. Bring it on. Watch this one on Monday. If it gaps above here, a lot of people are asking if they should short Micron. And the answer to that is no. No, heavens no. Don't be short Micron down here. Look for longs. Remember, if you're getting scared and you're panicking and getting fearful, that's probably a good time to buy. This is a good time to buy on Micron. And I will buy all the way down to 27 if I need to. Don't think it'll happen, but that's what I said during COVID on Micron. And yep, so September week 1, not that far away actually. And 42, I'm all about getting put some shares there. And if I do, great. If I don't, all good. And all right, so that was pretty much it. So type in a 7 if the analysis was pretty clear. I said, do not be short at all. Look to go long. In fact, if we gap above this high tomorrow, which is Monday, play it bullish. Right? So again, if you guys want the recording, let me know. That's the type of analysis I do every single day, Monday through Friday from 5 to 6 p.m. Eastern. And if you ever think that analysis would help you even just a little bit, you can subscribe if you want. So here's Micron, and this is what it did the very next day. So this was that next day, right? So you had the 21st of August, which was a Friday, and that was Monday. So, ladies and gentlemen, did it gap up? Yes, it did. Did I know it was going to gap up? No, I have no clue. I just said that it could, right? It's at a spot that I would not short. Under no circumstances would you short Micron on there. That would just be dumb. So go long, right? I was buying it with both hands. And when it gapped up, I was like, oh, cool. This is going to be a really great day trade opportunity. So this is what Micron did, right? It had the gap up. Really, really cool. High wave, thumbs up. This is what the 5-minute chart looks like on Micron. So why was it a good gap? Again, it is a very powerful company. I think all of you know how Micron makes money. It was extremely sold off, right? It was just more or less absolutely tanking. So you have tons and tons of people who are trying to short down there. Remember how I said a lot of people asked me, should you short Micron down here? And I said, no. The reason I was doing that is because people were starting to be afraid that they thought Micron's going to keep going lower. I could read that sentiment. I could feel it in the chart. So I know other people are shorting down there. They're afraid, they're terrified, they're scared, so they're selling. Therefore, if we gap up, shorts will be trapped. That's that experience. Now, when this candle comes in on a 5-minute chart, is that a bearish candle, ladies and gentlemen? And the answer is, of course, obviously it's a bearish candle. Does it have a lot of bear volume? Yes, it does. Is this on a 5-minute chart? Yes, it is. I mean, it says it right here. So all those factors, could you have figured out how to trade Micron on that day? I think the answer is yes. This is what the 3-minute chart looks like. Look at this beautiful 3-minute. Matthew says, do you mostly plan day trades a day or so in advance? Yes. So you got your 3-minute bearish candle, right? There's your, is this a high wave bearish candle? Yes or no? High wave, question mark? The answer is yes, it is. All right. Did we go lower the next candle? Yes, we did. So if we went lower the next candle, would I have my entry still at the blue line? Or once we go even lower, I now go, well, if we take out this level, those bears will be trapped. So I move my entry down to the purple line. What do you guys think? Blue or purple? Submit your guess. How'd I play it? Buy low. Yeah. So that means I did the purple. Because again, the reason I did the purple is you want to buy as low as possible. So if the stock went above the purple line, would people still be trapped? Yeah. Who's trapped? This dude. Look at this. Look at this dude, just shorting like a beast, thinking that that gap's going to fill. Cabria says, where'd you have your stop loss? In the gap. Easy. Right in the gap. 42.80. Clean as day. So entry here, stop loss there. Layup. Cabria says, you didn't use pre-market for this one. Stay tuned, my dear friend. That's how I know I'm teaching it well, when everyone's like, wow, what about pre-market? And the next slide is pre-market. Yeah. I love it. Got you in the pocket. I got you where I want you. So what about what about pre-market? So 5-minute pre-market chart. Look how clean this pre-market resistance is. Look how clean. So when you get this bear candle, could you, ladies and gentlemen, I mean, would it have been possible to let that candle close and then you use some of the analysis from previous classes like my intermediate series and realize that you're going to buy halfway inside that giant candle, put your limit buy at old resistance, new support, put your stop down there and still get a winner? Could you have done that? Is that possible? Is that something you could have done? Sure. Yeah. Great trade on Micron. Whew. Do they always work that way? No. But when they do, it's all worth it. It's always worth it. It's about finding that really, really good pressure. It's about tracking down some exceptional pressure. So what I want to do really quick is just back trade some more examples. And we're going to go look at Disney. So one of my favorite strategies is when the stock is in a nice uptrend. And look at this. So we can see in the last 4 months, Disney is in a nice uptrend. Right, really, really clear uptrend. And you had this small bear candle. Tyler says you should always wait for a close above pre-market resistance. No, you don't have to by any means. You can, but you don't have to. So small little bearish high wave type of candles, some compression, right? Gapping out of a 2-day pennant pattern. I love, love, love that strategy, especially in a nice uptrending stock. Like gap out of a 2-day consolidation is, I mean, such an easy strategy. Just go look for a bunch of 2-day pennant patterns and look for it to gap above or below, you know, and play it. So look at this, nice little bullish candle, super small bearish candle, right? It was going lower. It's still Disney after all, so we know it's going to go higher eventually. So let's go back trade that gap that happens the very next day on the 24th. I go into a 3-minute chart. And it was on a Monday. Okay. So it was gapping on a Monday, which made it even better. All right, so here's the pre-market. And I'm going to draw a resistance line at the pre-market. It's like, okay, cool. There's the pre-market high, and there's the pre-market low. Wonderful. So Tyler, do I want to close above this pre-market resistance? The answer is it depends. What if we trade down to here? Can I just buy? Do I have to wait for it to come all the way back up here before I get in bullish? Right? The answer is no. I don't have to do that. Why would you do that? Doesn't make much sense. So we can definitely wait for a close, or if I get a nice little bear candle and I have a risk reward into here with a stop down there and I can sell some at the pre-market resistance and maybe it breaks higher. I don't know. Let's find out. This is how you get really, really good at day trading, is you practice this stuff. Even if you think you know what's going to happen, you're like, yeah, the stock just went straight up or straight down all day. Cool. Go into it, check it out, look it out. Brett says, does the movement of the S&P affect your day trade plans at all? Yes, it does. We'll talk about that in a future class. All right, so first candle out the gate. Bow, 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 bow. Look at that one. Oh my. Oh my. Do we know how we're going to trade that? Yeah. Boom, boom, we're done. That's it. Entry here, stop loss there. Get in. I mean, all you. And then this line right here, pre-market resistance, how much do you want to sell there? And the answer is it's up to you. It depends on how you're doing for the month. It depends on how you're doing for the week, the day. We're going to talk about that in module 3, but it really just depends. I'm going to exit a quarter and then see what happens. That's it. 3 minutes in, I'm setting that trade up. Now notice this is the high of the previous day, or the main resistance of the previous day. I'll make it, I don't know, purple. So this purple line is a lot of resistance from just the previous days. Okay, you can kind of clearly see, boom, 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 boom. We don't close above that line all day the previous day. Not once do we close above that the previous day. So you have the previous day's high, you have the pre-market support, you have the pre-market resistance, you got your setup, and uh-oh, well, what do we do now? We obviously cancel and abandon everything because the stock went 2 pennies below our entry, our stop. And there's my girl, Cindy. Sydney says, is this a candidate to lower my entry and lower the stop accordingly? Whew. What do you all think? Is Sydney getting that one spot on? She is correct. Right? Boom. Let's lower it. Entry here, and then we lower our stop some too. Gives us a little bit of a better risk reward. Now, is this trade going to work? I have no idea. I hope it does. But I can say this, if it does this and stops me out, do I have an indication of where I could get in again? Do I have an idea? Do we have a price point possibly of where we could try a second time? Right there. Pre-market support. Okay, so let's find out what happens. Next candle. Oh, so next candle is an inside candle. Inside candle. Pressure building. Momentum building. Indecision is happening. No one knows what's going to happen. Could it do this? Yes. Could it do this? Yes. Is my order ready to go? Yes. Can I set this trade up, Brett, in my broker? Automatic orders so I can walk away and go have some ham and eggs for breakfast? Could I do that? Of course. Of course you can. That's like day trading 102, which is going to talk about in class 5, how to set stuff up like that, because that's really key. That's probably what I'll do. Because one of the questions I get the most is, Newsom, how do you do everything that you do all the time? It's because I automate a lot of things. So this trade, I'm just going to automate it. I'm going to set it up, and then I'm going to go do something else. I'm going to go walk away. I'm going to go enjoy some breakfast. David says, when you moved your entry and stop, you left the quarter target. That is correct. Buy low, sell high. All right, next candle. We're in. Okay, cool. So, awesome. Next candle comes in. That's nice. Next candle comes in. That's nice. Next candle. Oh, all right, awesome. So we hit our target. Now, we're going to talk about this in class 3 a little bit more, but when I'm moving my stops, again, as I mentioned earlier, I only move them to a place where I don't think everyone else is going to do it. So I would not have moved my stop yet. When I hit my target, I will move my stop. Cabria says, I'm using Fidelity. I don't know if I can set that up. You can. It's called Fidelity Pro. Download it, practice it. It's there. I promise. Cabria says, is it free? I mean, you tell me, man. You're the one that has it. Go find out. I don't know. I would assume it's free. Should be free. Nick says, I have it and it's free. Fidelity Active Pro. All right, cool. Go for it. Should be free. All right. So now, once I hit target 1, I generally wait about 30 minutes before I move my stop. That's one of my slight method of, not always, but 95% of the time, I wait 30 minutes before I move my stop. Why? Because I can robotically figure out if I followed that rule or not. Okay. I can automatically create rules in my broker and in my contingency orders. I can do all kinds of things if I know exact times. Plus 30 minutes, like John says, it's time to finish breakfast and have a nice little workout. Brett says, does your hold time change between a gap and go and a retest gap? Yes, gap and go, I hold longer. I hold as long as I possibly can on a gap and go. Good question. We'll talk more about that in class 2. All right. So target 1 has been hit. I now would definitely move my stop. And I would move my stop to this is what it would look like. I would take it here. And what do you guys think? Am I taking my stop and putting it there? Good old trail out city? Nah. Right? Where would everyone else take their stop? Let me do the exact opposite of that. Most people are going to have their stop right here. Am I right? This is where most people are going to have their stop. So good. Not going to place it there. I'm going to place my stop right here. Right below low of this candle. 127 and some change. What? Why? Why would you do that? Matthew says, you wouldn't break even if you're that profitable. No. Got to hold, man. Build your holding muscle. Get those guns. Let it do this. The market's open until 4 p.m. Eastern almost every day. So I barely move my stop and I go, all right, cool. Let's see what happens. At this point, I don't have any other target. No other target. I'm just letting it do its thing. I'm going to see what other kind of pivots can be formed. I'm waiting. I'm still waiting. Now, at this point, a rotation has occurred. A pivot has been formed. Now, I will move my stop above break even. I never, ever, ever put a stop at break even. It's always above or below. Always. All right, new stop loss. So I'll put it a little bit above break even. Okay. So now my stop is a little bit above break even, so I'm guaranteed to win on a trade. Because break even means you're working for no money. I'm not a volunteer when I'm day trading. I do volunteer, but not when I'm day trading, I don't. Break even, what is that? What are you doing? Break even. Who said that, like, was it Vince Lombardi who said tying in football is like kissing your sister? Something like that. So break even is like, what? I'm here to make money. So anyway, I moved my stop just a little bit. I know that most people are going to have their stop right there. So I'm going to wait. I'm not going to put my stop there. And now I'm going to come up with another target. Now I'm going to just zoom out a little bit and go, okay, there's a really nice resistance here. No way we hit that. But what if we do? That'd be really cool. We probably won't, but it's a gap and go. So maybe. So all I'm doing, my friends, is I'm literally, you can see, I'll draw this pre-market line up. I'm just zooming out and finding another resistance. Type in a 1 if you're with me on that. I'm just finding another resistance going, okay, cool, there it is. That's my other target for my other 3/4 of my position. And at this point, I have moved my stop to where I am not mathematically going to lose money and I have a target in place. Guess what I do for the rest of the day? My stop's above break even. I have a target in place. I eat ice cream all day long. That's right, Pam. That's it. I'm just going to sit on the couch and eat ice cream the rest of the day. Or run a marathon, one of the two. I don't know. But the cool part is I'm not stressed. I'm not going to watch it. I don't care. I've done my job. My job is to mitigate risk. So now I'm going to go do whatever the heck I want to do. And I'm not going to come back until the close of the market. I mean, whatever the close of the market is. Okay. We're coming up. So that's like, all right, there we go. So there's the close. And could I have sold everything right there at the exact high? Sure. But you're not going to do that. So Tom says, how many trades do you monitor at any one time? I'm almost never in more than 4. Almost never. Vast majority of the time, 2 or 3. So I'm not going to catch this. It's sheer luck to sell there. I wasn't even by the computer during this trade. So I just set it up and that was it. I kind of did its thing and I'm off and I'm doing other things. So that's the target. That's the setup. That's the trade. That was a back trade. Well done. Hope you enjoyed it. So these were some other gaps on BABA that occurred on Mondays. Daniel says, I may have missed it. Was there an average winning percentage on option C strategy? Great question. That one is 49%. So here are the, David says, did you have a sell order at the 3/4 of the target? Yes, sir. That would have been a sell with a limit order. Yep. Bob says, thanks for this. You're very welcome, my friend. So these are 2 gaps on BABA, both on a Monday. Do you see how they're small gaps, but they clear multiple days? Notice how this gap clears like, I mean, everything. And this gap clears like all of those. That's what I look for. The more days a gap clears, the better. If it clears a bunch of gaps, I'm all about it. I'm all about that gap, So the challenges of day trading, realistically, losing small. Don't get all aggro and try to get it all back in one day. That's literally how 95% of people who lose money. It's that one right there. One random Tuesday. Matthew says, what is aggro? It's short and Aussie for aggressive. That's Australian for aggressive. Getting all aggro. You wake up on a Tuesday going, all right, this is the day I make $1 million. And you shove all of your money in and you just get absolutely hosed. I did that like 3 Fridays ago. I was like, oh man, I need to make a lot of money because I spent like way too much money on this thing. And I was like, okay, I need to make at least $4,000 today. And I woke up and just lost even more. I lost like $3.5 grand that day. It was bad. So don't get all aggro, right? Don't get aggressive. Don't try to get it all back in one day. Pressing the wrong buttons happens way, way too often. What are you all doing? You are a professional. How are you pressing the wrong buttons? Come on. Practice your skill some. Like sit down at the broker and like practice, read your order out loud. Don't press the wrong buttons. Don't do that. You are a professional. That's like playing tennis professionally and showing up with a pair of golf clubs. Learn how to press the right buttons, please. Not being fast enough. I put that in quotes because that's an excuse. Even if you're 95 years old, that's still an excuse. Okay. You can set all these orders up before the market even opens. I know it doesn't take you 47 minutes to set up a trade. Tom says preview before you place a trade. Yes, yes, yes. That is absolutely correct. Not having enough capital. A lot of people say they don't have enough capital to day trade. Also a myth. We'll talk about that more, but you do have to have money in order to trade. That is accurate. But capital is the least of your concerns. Not having enough time, also an excuse. You can have 900 kids. You still have exactly the same amount of time that everyone else has. That's the worst time. That's just a horrific excuse. That's all it is. I'll call out every coaching student ever who says, I don't have enough time to do this. Okay, sure. So if you're telling me that your daughter breaks her leg and you're watching your football game, oh, sorry, babe, don't have enough time to take you to the hospital because you broke your leg. I'm kind of busy right now. Right? Time is called having a priority. If you have a priority to do something, you'll do it. And then here's a challenge of day trading. Become an amazing loser. Like the best of losing. I still struggle with that one. I don't like losing, even in fantasy football. I don't like losing, but you have to practice. One of my sayings that I like a lot, that I try to say to myself often, is you can make money in the stock market every single day. Sometimes it's just for someone else. Right? So you can make money every single day in the stock market. Sometimes it's just for someone else. So be cautious, be cool, be calm, be collected, become an amazing loser, lose like a professional. Remember, Tom Brady has lost more Super Bowls than most teams have made it to. So here are personal suggestions of mine. As you start your journey, remember that less is more. It's okay not to place a day trade. It's perfectly acceptable and reasonable to wait multiple days to find something that you love. Make it about the process, not about the money. Remember, this is the initial aspect. Yes, I know you're all here to make money. I get that. Money grows on trees, okay? It's easy. It's outside. It's not hard. People sell pine cones on Etsy and make money, all right? Money is not the challenge. Make it about the process and the money. You'll go get more money. You ever want to get more money, call me. I'm a specialist at helping people find money. Money is easy. It's there. You got it. You're just either scared or afraid of tapping into it. That's it. Money is everywhere. And keep this one in mind. If you're stressed by day trading, don't do it. So if you do a bunch of day trading and you're like, man, this stresses me out, don't do it then. Like, there's a lot of easier ways to trade. Life is meant to be lived in a non-stressed way. I want to wake up every day without an alarm to a beautiful queen of a princess sitting next to me and getting fed grapes and hugging my children and relaxing and smiling and doing whatever I want from wherever I want in the world because I want to. Like, that's what I want to do. Like, I just want to have an amazing time all the time. Life is not meant to be lived in a stressed way. If you're always stressed, you're doing something wrong. Chief says, hey, that's my life. I know, man. And you got a queen next to you. The queen of queens. Tell Sue I said hello, and she is absolutely phenomenal. So keep that in mind, and something to all think about. If you are stressed by day trading, don't do it, right? Two other things. If you want more information about me and my life, I have just launched a new podcast that is kind of like a reveal all type of thing. It's called Broke to Woke. It's one of the best things I've ever done, according to Mark Sukamel, who's one of my coaching students. Love it. One of my best friends. Love this guy. He says one of the best things I've ever done, so I'll take his word for it. I like it a lot. If you're listening to this and you like podcasts, everywhere you enjoy podcasts, it's really good. And my goal in the podcast is to help you uncover the micro, magical, mental moments that can shape your financial future. And also, I do have a book. If you like, I talked about, use this term a few times in this class, Money Grows on Trees. If you haven't read it, check it out. It's worth $9. It's a really good book. Enjoy if you like reading. And if you have not taken one of these 3 programs and you came through day trading and you're like, I don't know what you're talking about, Newsom. I don't know. I'm so overwhelmed. Then start here, please. I don't think you made it this far. But if you did, and you're sitting there and you just have no idea what we just talked about, and that whole time went right over your head, and you're like, I think I just fell into a sea of scorpions. Then go to the beginner's class and start there, and then go to the intermediate, and then go to the advanced. Go through that free material first, and then you can start rocking out some day trading if you haven't gone through all those already. So I'm here to answer questions for the next 6 minutes. If you have some, throw them at me. Otherwise, thank you so much for being here. That was amazing. Are these classes getting better, or is it just me? That was so good. Thank you, Robin Steckel, for helping me with the slides. Thank you, Matt DeLong, for being my best friend, business partner, mentor, and chief technology officer of Real Life Trading. Thank each and every one of you for being here. I love your energy. I have no clue how all of you can have such amazing energy for 2.5 hours. For those of you who were here live, you did amazing. Prash says, what time is the class tomorrow? Same time, same place, same link and everything. 6:30 p.m. Eastern, class 2 starts. Brett says, honestly, greatest teacher I found. Thank you so much. Oh, thanks, man. I appreciate that. Huberto says, making sure I logged in at 7:01 Eastern and you were already on slide 17. Class starts at 7, or am I being slow? It starts at 6:30 p.m. Eastern. 6:30 p.m. Sybil says, are you sending out the recordings? Yes, I will. Yep, they will be sent out. All kinds of good stuff. Everyone will have them. Daniel says, I can't make it tomorrow. Will it be recorded? Yep, it'll be recorded. It's always recorded. Always and forever. All righty. Beautiful. Nick says, what's the text number for the slides? Oh. Text Newsom to 55444. There you go. Daniel says, you are amazing. Thank you. My pleasure. You are so welcome. So after this, I don't start my running until tomorrow, but tonight I'm going to watch Avatar: The Last Airbender. with my family, and then work on class 4 and 5. I'm still piecing together some slides because there's just so much information. Just working on getting everything together in a succinct way because I really feel like I could teach this for 95 hours a day. Terry says it's 2 a.m. in the UK. Yeah, man, get some sleep. Rick says, great show. Yeah, hey, type in a 2 if you've never seen Avatar Last Airbender. So if you have kids, put that show on. It's very kid friendly. And I promise you, as a parent, you can watch this and be blown away. Oh man, like it has some deep messages. So as an adult, you'll enjoy it and your kids will love it. It's a really good family time. And the episodes are only 20 minutes long, really easy to knock it out. So Sky says, at what point in your trading development did you realize it was more about the process than money? Probably about 3.5 years in. When every single time I tried to make the money, I ended up losing it. And every time I just walked away and didn't care what happened, I ended up winning. And it just kind of clicked. Maybe I should just focus on trading rather than trying to make money. And once I did that, I started making more money. So, because your job is to execute the plan. It doesn't matter what's going to happen. You win or lose, but it's a phenomenal question. Ricky says, mine was every time I did it, I kept losing. Yeah, that can happen a lot. The psychology of charts is fascinating. I can't get enough, says Brett. Yeah, Brett, man, it's really, really cool stuff. Love the psychology of the charts. David says, just curious, do you plan on doing a swing trading techniques class? I do, I have, and I've done it. So go to reallifetrading.com and click on intermediate trading, beginner trading, or advanced trading, and take any of those 3. I cover swing trading in literally every single one of them. And if you want more courses, we do have even more courses. Harmless sales pitch. Day trading weekly options, back trading marathons, the best thing that you could ever buy in your life. Options trading and increasing your net worth in 2 hours per week. That is a swing trading program. Michael Lohman says best sites for research, YouTube and FinViz. YouTube, FinViz. Great, great websites for research. Mike says, back trading marathon is a steal. Awesome class. Yeah, super, super cool. Bernie says, thanks from Australia. Woo, my pleasure. So welcome. Ladies and gentlemen, thank you for your time. I appreciate it. You are phenomenal. And I will see you all later, either in the recording of Module 2 or here live if you are here live. So thank you for your time, your commitment, your dedication, your love, your generosity, and thank you for helping us enrich lives. And until next time, love life, live life, and trade it. Bye.